All right, let's go into gold. I mean, it's on the rise again or not? I mean, generally, that safe haven appeal, I would imagine, is still pretty much intact, isn't it? Goldman Sachs seeing $3,700 by year end. What's your take?
Yeah, I mean, we've had gold create some very strong chart patterns from the super cycle low in gold to the high in 2011, and then we had the low in 2015. I use Fibonacci extension, which are these levels, and more or less Fibonacci theory, if people should look into it, it's in everything in the universe. But if we have a pause at the 618 level, which is 68% of the first initial rally, then we almost always go up and hit this 100% measured move, which is about 2750. So we have hit that stage in gold, and now we're in this what I call is a blow-off phase. The market is primed and ready. Everyone's piling in, driving gold up. Typically, once we hit these measured moves, we saw the same just before the last major pullback in gold in 2011. And also we saw a blow-off phase, which looks pretty small compared to the rest of the move, but a big blow-off phase in gold just before the 2008 financial crisis. So while gold is super favorable in miners, we are coming to a point here where I think it's actually ready for a more significant pause and pullback with the economy and the recession, which will become a big buying opportunity.
Yeah, Chris, those patterns are compelling indeed. Now, I just want to go back to what you said about stocks, because sticking with gold, what's your take on actual gold mining stocks at the moment?
Gold mining stocks have been doing, they've been underperforming for a long time. They're nowhere near all-time highs. They're way undervalued in the grand scheme of things. They are coming to life over the past week or so. They're really starting to play catch up. Overall, I think, we're just in a feeding frenzy right now where people are seeing gold hitting new levels. We've got maximum, I think, uncertainty. And miners, people are moving in because they're the leverage play on gold. Gold is pretty slow. It's like a big old gold pet rock. But when you move to miners, they have lots of leverage. So that's where money's moving right now. They say, oh, gold's in an uptrend. How can I maximize it? Go to miners. And that's what we're seeing right now. And miners, both gold and silver, are hitting resistance levels. They're hitting Fibonacci measured moves, previous resistance levels on the charts from years ago. So again, everything for gold and mining stocks in general are a little bit long in the teeth here, ready for a pause. Doesn't mean they're going to reverse and go down. It just means we're ready for a bit of a pause before potentially going higher.
Let me end off with copper. If you want to pull up a chart, you can. Copper appeared to have had a slight dip at the start of the week, but I see it's back up again. What's your take on it?
Copper is seen as a overall barometer, kind of economic barometer. And if I pull up the chart, you'll be able to see here, copper has been performing very well over the last few years. It is running into, obviously, kind of a rising trend line where whenever we get copper up into these levels, we tend to see some pretty strong bouts of selling. And we have seen a pretty big pullback with all the chaos with tariffs. I believe I'm not sure why copper is actually still holding up. I think we're going to see it pull back. Copper miners have been holding up fairly well also. Again, resources tend to do well in the late stages. People move out of the stock market because they're worried about financial collapse and currency issues. So they move to commodities. And right now we're in a kind of a commodity resource kind of area where they're moving higher. When we look at metals is kind of a place to be in terms of they're going to hold up value and go up, but copper has a topping pattern that does point to much lower prices going forward. And this big reversal bar that we saw on the monthly chart is a sign that volatility is here, and more or less we're probably going to see continued red bars over the next several months.
Interesting indeed. Well, thanks very much. Analyst Chris Vermeulen is with the Technical Traders. Chris, thanks indeed for chatting to us.
Hey, thanks. A pleasure. Take care.